any person. It could be another chartered accountant, it could be another company secretary, it could be another lawyer, it could be anyone. So it depends upon what kind of expert you are looking at. So based on that, they have split the type of experts into three types. First is they have said using the work of another auditor, wherein there might be multiple auditors working together for the same company. So in those cases, how do you determine what areas to be done by which person? How do you take up the different parts of the reporting? How do you do the final report? All of that, the documentation, all of that has been discussed over SA 600. Then comes SA 610, where it is all about internal auditors, how the statutory auditor can utilize the services of an internal audit. And last would be the audit experts. So SA 620 is all about audit expert, as in think of the lawyers, think of the company secretaries, think of the actuaries, think of all of the other professions where they can give a professional certificate, engineers, doctors, anyone, where they can give a professional certificate. They will ideally fall under SA 620, where they call it as an auditor's expert. But if you're dealing with a chartered accountant, then they are splitting the chartered accountants into two parts. One is statutory auditor, another is internal auditor. So SA 600 is all about another auditor, wherein there are multiple statutory auditors for the same entity. So with respect to that, we are trying to establish as to how the procedures are shared, how the documentation is, how the people communicate with each other, how is the reporting happening. That is what is the primary concern of this standard. Now, the very first thing that we need to understand is that there is another standard. There is another standard which is called as SA 299. There is another standard which is called as SA 299, which particularly talks about the joint audits. Now, there is a significant difference between a joint audit and using the work of another auditor. The significant difference will be with respect to what kind of entity is being handled by the auditors. Now, let us take, for example, a bank. Think of State Bank of India. Just imagine the number of branches State Bank has all over the country. Is it really practically possible for one single auditor to carry out the audit of every single head office, back office, maintenance, clearing houses, and the branch offices, ATMs, everything included? Is it really practical for one single audit firm to carry out an entire SBI audit? Veena? First thing, it is impractical. Second thing, it is highly risky. Because if at any point of time anything happens to that single auditor, the entire audit operations will come to a standstill. Because just imagine something like PwC, they also got stuck in a legal tussle because of PwC scam. What if you accept that PwC as the singular auditor for your entire organization, and then suddenly the auditor finds themselves in a legal tussle? So all of this will cause issues. So that is the reason they sometimes do the split. Okay. Now, how is the split done is where the SA 600 and SA 299 differ. If the branches are taken separately, if the divisions are taken separately, the head office, the final audit report is carried out by one person, but individual branch offices, individual divisions are taken by care by another auditor. Let us say SBI has corporate division, SBI has retail division, isn't it? They have branches for retail as well as corporate also. So imagine that all the corporate branches are carried out by one single auditor. All the retail branches are carried out by another auditor, and then the whole final consolidation, the whole head office is carried out by a third auditor. In this case, there is a clear distinction as to who will carry out which work, isn't it? There is a very clear distinction. The branches, the divisions are clearly demarked between three different auditors. So, this will be the case of another auditor, SA 600. But if you take joint auditor, what will happen is the same head office will be audited by two different auditors. That is joint audit. Okay. So joint audit is the same head office, the same company will be audited by two different people. Now, when it is being audited by two different people, naturally there should not be an overlap. And even in SA 299, we will find that there is no overlap. But in the case of SA 600, instead of the single auditor doing the work of all the entities, all the branches, there are three different auditors carrying out the same statutory audit. But the demarcation is very clear. All the corporate branches will be carried out by one particular auditor. All the retail branches will be carried out by one particular auditor. And then there is a final auditor, third auditor, who will do all the consolidation. This is the case of a SA 600 using the work of another auditor. Other examples that you can think of is SBI has branches all across the world as well, isn't it? So when you are having branches all across the world, you cannot send an Indian chartered accountant everywhere across the world.
Subhash, morning, Subhash. Just a small request. Call me after once you are free. Before when you are free, call me before 10 a.m. Indian time or after 1 p.m. 10 to 1 I have class. Okay. Call me before 10 a.m. or after 1 p.m. Indian time.
Okay, sir. Kandipa.
Bye.
Bye. Okay. Think of what was it? Think of a foreign branch where, let's say, SBI has branches all across Europe. SBI has branches all across Gulf. SBI has branches all across Africa. They have branches all across North America, South America. Everywhere you will find at least one branch. Okay. Not every single city like in India, but at least the country main one single place in the entire country or one single place in the entire continent. Somewhere it will be there. Now, it is not practical for an Indian chartered accountant to go and do the audit of all the entities outside the world because, first thing is, there are local legislations, isn't it? The local legislations always, give preference to the local chartered accountants. So, your sign is not valid outside the Indian territories, isn't it? Except for few instances where the Gulf exclusively recognizes Indian chartered accountancy sign. So this is kind of an exceptional situation. Otherwise, there is no country in the world which will specifically authorize the signature of an outsider chartered accountant. That is why if anyone wants to move from India to Australia, they have to again get a certification from ICA Australia, because the ICA Australian body will then give you a certification and you have to give away the membership of Indian ICA. You have to take the membership of Chartered Account ICA Australia, and then you can do the signatures over there in Australia. Similarly for UK, if you are doing ICA UK and Wales, then you have to give up the Indian Chartered Accountancy membership. You can apply for certain exams over there, pass them, and then you need to get the membership there and utilize it. You cannot hold two memberships at the same time. Not just within ICA, even outside ICA, like say you're having ACCA or CMA, they also don't allow you to hold multiple memberships at the same time. So if you're having ACCA, you cannot have a CA membership in any other part of the world. Now, so I was talking about the foreign branches. Now, let's say there are foreign branches which have a different set of requirements, regulatory requirements, signatory requirements, all that stuff. So the Indian CA will only sit at India and he will ask the foreign auditor. Someone will be appointed by SBI at the foreign location as well, right? So he will ask the foreign auditor to audit the entity as per foreign rules and regulations and give a audit report. So based on their audit report, this guy will prepare his own audit report, isn't it? So he is doing the Indian level audits, everything. But for all the foreign branches, there'll be separate auditors from whom he will receive the independent audit reports, which will be consolidated by the Indian auditor for State Bank of India. So this is what is SA 600 situation where you are using the work of another auditor. So let's look at the applicability. Situations where an auditor, principal auditor, there are always two people. One is principal auditor, the other one is the other auditor. Irrespective of the number of auditors, it is always the other auditor. SBI Indian main person will be the principal auditor, and then all the other people, all the foreign branches will be other auditors. Situations where an auditor, that is the principal auditor, reporting on the financial information of an entity uses the work of another auditor, okay, with respect to the financial information of one or more components, that is either division, branch, JV, subsidiary, etc., included in the financial information of the entity. Now you can think of the other examples also. One I have given, the division difference. Division difference is corporate, retail, head office, the main consolidation. These could be divisional separations. Then you can have branch level, Indian branches, South Indian branches, North Indian branches, Central Indian branches. Like this, you can have branch wise divisions. And then you can have subsidiary wise divisions. Think of all the banks that got merged into State Bank of Mysore, State Bank of Hyderabad, State Bank of Travancore, State Bank of Rajasthan. All these are basically individual subsidiaries which still exist on paper. Okay, it's not like they have been wiped off. They will still exist on paper. So those subsidiaries needs to be separately audited but reported under the uniform head of State Bank of India. Now, think of something like Nestle, or think of something like Tata, think of something like Reliance. When Reliance Industries is reporting something, or when Tata Sons is reporting something, they have so many entities under them. Tata almost has 200, Tata Sons has almost 200 entities under their banner. Now, when Tata Sons is going to consolidate their financial statements, the auditor of Tata Sons, what he will do is, he will take the individual audit reports of TCS, he will take the individual audit reports of ITC, think of any other food industry, lot of products. So FMCG, lot of products. Hotels, lot of products. Taj hotels, and then you have ITC hotels. All of these, lot of subsidiaries they have. So all these divisions, all these subsidiaries, they will be audited by different people, different auditors. Because see, one thing we need to also think of is that some auditors will have really good experience with hotel industry. Some auditors will have really good experience with FMCG industry. Some auditors will have very good experience with banking industry. So it's not practical always that you will find an auditor who is like all in Alagaraja type auditor கிடைக்கிறது. It is very rare actually, because you cannot practically work on everything, isn't it? You cannot put your hands everywhere at the same time. So based on the what is that, the experience of the auditor, they will be hired for the specific branches or divisions or JVs. And then those you can think of Tata Motors as well, Tata Steel, all of that. So then these conglomerates, these things will be individually submitted to the principal auditor of Tata Sons. Then Tata Sons principal auditor will combine all these audit reports and issue one single audit report. Okay. So let's move on. Applicability, like we said, it is where there are two auditors, one is principal and then the other. And there is a clear demarcation where they are auditing different entities or different components. Now, non-applicability, like I said, joint auditors. Joint auditors don't audit two different companies or two different divisions. They both will be auditing the same company, same division, but the work will be too large, so they will split the work. So joint auditors, and then auditors' relationship with the predecessor auditor. That means when you're saying using the work of another auditor, it does not mean audit report of previous year. It does not mean audit report of 5 years back, 2 years back. It means auditors who are working for the organization in the or for the same financial year, for the same reporting period. All of them will be working together. That is when the standard is applicable. So principal auditor naturally will be the person who will be consolidating everything and then issuing the final audit report. So what is he supposed to do? Consider the professional competence of other auditor. If other auditor is not a member of ICAI, it is not compulsory that the audit has to be carried out by a chartered accountant. But in the case of a statutory audit, ideally it will be like that. But in the case of a internal audit, it is not compulsory that it has to be carried out by a chartered accountant. Or you can think of that like this also. This is actually a copied sentence from the international standard where multiple auditors are recognized all across the world. If you go to American continents, their CPA can sign as a statutory auditor. If you go to UK, ACCA and CA both can sign the statutory audit report. If you come to India, there is ICA only. If you go to Australia, there is CPA as well as ICA. So some countries have two different bodies who are equally eligible for signing on the statutory audit reports. So that is the reason this sentence was given in the international standards, but they have simply copied it here also. So just assume that there is a audit carried out by a CPA or an ACCA qualified person, but they are not signing it. They are just issuing it for the purpose of the principal auditor அப்படின்னு வச்சுக்கலாம். Second, Indian ICA specifically bans the usage of any other signatory except for Indian Chartered Accountant that is issued by ICA, member of ICA. You cannot sign the statutory audit report. So in Indian scenario, it has to be only a CA. So what is the first thing is validate their professional competency. Are they a professional is what we have to establish. Second point, visit component and examine books of account if essential. See, based on the professional competency, you have to decide whether there is a requirement for you to visit the audit location and do a sample audit. Some places there may be a requirement, some places there will not be a requirement. Think of Tata Sons auditor, principal auditor. When you're looking at things like ITC, when you're looking at companies like TCS, when you're looking at companies like Tata Steel, Tata Motors, these are like huge. Individually itself, they are significantly very huge. Just imagine, will they be hiring small time auditors for their audit reports? Definitely not. They'll be definitely hiring big time auditors. But at the same time, Tata has subsidiaries which are quite small in quantum as well as the revenue. So those instances they may not be willing to go for big auditors because big auditors generally come along with a big fee. So there in those instances they may be hiring small time auditors. So in those cases, based on the professional competency or based on the professional history of that particular chartered accountant, the principal auditor may decide to visit the entity and do some sample verification. So sometimes based on the consolidation, or sometimes based on the overall consolidation of the financial statements, there may be some areas where you might not be in a position to reconcile certain items. So when you're not able to do the reconciliation, those areas, when you have to revisit the entity and then try to figure it out what exactly is the issue. So for those areas, you may actually go back and do the actual audit of the particular division or entity where the reconciliation is not working out. All that stuff you can do. But always keep in mind the professional competency of the other auditor also takes precedence. Here it is very much important that you protect their integrity. You cannot just like that come and override another chartered accountant. Here what will happen is, first thing is it will be insulting another chartered accountant, because if you try to come and raid another chartered accountant, it will be showing a bad image to the people, isn't it? So that is why ICA takes these instances very seriously, and they say even if there is another auditor, treat them with dignity, even small or big, treat them with dignity. Try not to downgrade them in the front of market. Try to maintain your professional integrity and ask them to issue reports as per the professional standard. Now, if you are not satisfied or if you want to do cross examination, you can visit the component under the branch subsidiary, joint venture, division, all these things. Obtain sufficient appropriate audit evidence that the work of other auditor is adequate for principal auditor's purposes. By default, if you believe in the reputation of the chartered accountant, or if you believe in the reputation of the audit report that is issued, by default, people will not go and touch the other organization. They will simply rely on that audit report and carry on with the consolidation. But in case there may be rare instances where there might be requirement for certain areas to be revisited. In those cases, they will carry out some specific procedures. Whether these specific procedures or whether the general procedures, first of all, you have to get a confidence that this audit report can be used. So, with respect to that, you can get some audit evidences to backtest or do anything, and that will be called as your sufficient appropriate audit evidence for the purpose of establishing the adequacy of other audit reports. Next. Discuss audit procedures by other auditor. What is audit procedures? You check with them as to what was the sample size that they have taken. You check with them as to how exactly they have carried out the audit. What were the procedures used? How did they make the documentation? Did they use software, or was the audit carried out manually, or was there involvement of software? All that stuff you need to understand to establish the adequacy of the audit report issued by the other auditor. If they have used softwares and if they have used audit softwares and done, then there is a higher reliance. Naturally, there is a higher reliance placed. Even if it is not a audit software, if the auditor is a very experienced auditor in the market, if the auditor has very good reputation and name in the market, naturally their audit report will be having a higher recommendation, higher comfort for the principal auditor that okay, we can rely on this person's audit report. So in those instances where everything is manual, or in those instances where the auditor's reputation is not that great, those instances the principal auditor will decide how to proceed further. Next. Review a written summary of other auditors' procedures and findings through questionnaires and checklists. Just like how you audit the management when you are using the work of multiple auditors, or when you are using the work of other auditors, you need to sit with them and talk to them as to how exactly they have carried out certain procedures, how exactly they have done certain audit activities, how was the work scheduled, what was the competency of the people involved in the audit. If you are aware, when people try to hire organizations for audit, they will ask for profiles. So in the quote that is submitted by your firm, the chartered accountancy firm, they will also include the profiles of you individual articles or the managers who will be part of the team. So when the audit client is reviewing the quotation, the first thing they will check is what is the competency, what is the professional competency of this team. Whether the manager and the lower level people actually have knowledge of this industry or not is what they will establish. They will try to establish. If that is not there, then see the people who will be doing the work will be the article students, the senior associates. Now, if these people themselves don't have the experience of that industry, the entity will not consider this particular chartered accountancy firm for that audit, because even though the main auditor, the signing authority, has experience, the people who are actually carrying out the work, if they don't have that particular exposure, they will not consider that chartered accountancy firm for the purpose of shortlisting also. So this is one thing that happens with respect to these things. So when you feel that the other person may not be adequate, or even if it is adequate for your purposes as a principal auditor, you need to get certain confidence that the other auditor has used, what is the procedures used, what was the sample sizes used, what are the estimations made, what was the materiality level that was considered. All of these, when they document it between amongst themselves, it will become more clear for the principal auditor as to what he needs to do. So let's say the other auditor says, I have taken the materiality threshold at 50,000 rupees. Now the principal auditor feels that the materiality level is 1 lakh rupees. Then not a problem, because other auditor has anyways gone to the lower level and has carried out the audit. So the principal auditor will have a higher confidence. That means every transaction below 50,000 has been excluded, but every transaction above 50,000 has been audited in which count. Then it will be a higher confidence for the principal auditor that, okay, the material mistakes have been eliminated. But think of a reverse situation where the other auditor has taken 1,25,000 as the materiality level, but the principal auditor feels 90,000 is the materiality level for this particular organization. 90,000, or let's take 75,000. So what has happened is other auditor has taken all the amounts above and equal to 1,25,000. But the principal auditor wants to check everything above 75,000. Now, in those cases, the principal auditor will either request the other auditor to even audit items between that range, or the principal auditor will do some sample checks to see if the reports given by other auditor for the other materiality level will suit for these sample items or not. So the whole discussion, the point of discussion is to establish these certain basic factors like materiality, sample sizes, audit procedures, any decisions made by the auditor. All that stuff will be required to be documented. The software is used, what kind of source data has been given, what kind of evidences have been obtained from the management, all of that. Now, after that, if you find next, consider significant findings of other auditor. Naturally, if there is any audit report, there might be significant findings that are there included in the other auditor's report. So if there is anything significant or material for the purposes of the principal auditor, it may be material for the individual entity, but the principal auditor will try to establish whether it is material when it comes to the group as a whole, whether it is material for the purposes of Tata Sons or not. They will try to establish. So in those cases, what the principal auditor will do is they will discuss the audit findings with the other auditor as well as the management of that particular organization. So since it is a significant finding, it will find a place in the audit report of the principal auditor. And because of that, you need to sit and discuss with both the parties as to how it needs to come across. Next, perform supplemental tests if necessary. Since you are the person who is going to report it now, the other auditor has done their homework and they have brought it to your notice. Now, when you are including it in your audit report, it is you who will be held responsible for that particular observation. So since you are reporting on it, if you want to rely completely on the other auditor, you just provide the information as per their report. Otherwise, you can carry out additional audit procedures to establish whether the audit carried out by the other auditor is sufficient or not. Now let's take this instance. In case other auditor is not a professionally qualified auditor, so the first point is coming back again. In case the other person is not a professionally qualified auditor, there are countries around the world where they accept the signature of experienced people. They don't always consider chartered accountants or CPAs, public accountants, for the purpose of audit because the maybe the country does not have adequate chartered accountants, or maybe the country does not have adequate educational systems in place for having a professional body. So for those purposes, what will happen is they will consider, the government will give preference even to people who have not taken a professional degree but have a lot of experience. So based on these factors, if you want to carry out additional procedures, because they are either not a qualified person or their qualification is much lower than the Indian standards. For example, if we take CPA Australia, it is generally considered to be much easier than the Indian counterpart. And CPA in general is considered to be much easier than the CA exams. If you go to UK chartered accountancy is considered to be tougher than Indian chartered accountancy because in India, what happens is the intermediate and IPCC level, there is a free flow, but at the final level, there is a restriction. But if you go to ICA, UK, and Wales, it is the opposite. At the entry level and the intermediary level, the exams are extremely tough. It is very difficult to figure out the proper workflows unless you carry out an extensive study of the subject. You will not be able to clear the examinations. But what happens when you come to the final level is you will be in a much easier position to give the examination. So there, the filtering is happening at the starting and intermediate level itself, and the exams will be extremely tough. So generally, it is an accepted fact that UK and Wales is the toughest CA exam in the world. So next will come the Indian Chartered Accountancy. So if you are a person sitting in UK and consolidating the audit reports, just imagine if you're receiving reports from all across the world with professionals, but whose quality is not on par at your level, definitely you will think of performing additional audit procedures, isn't it? Similarly, Indian chartered accountants will also see whether the other professional is on par with them, or if the other professional has adequate competency, experience, expertise, everything they will take into consideration and decide whether additional procedures are required or not. The first thing that we all need to understand when there is another auditor, another expert involved is that they are also professionals, and that is the reason they need to be given adequate consideration. Discussions must happen. There must be documentations. There must be meetings which must be documented. Everything must have a proper workflow because there are two professionals involved. Now, if anything goes wrong with the between the two professionals, it will become a significant issue, and ICA will be ultimately at the receiving end, because when two chartered accountants fight publicly, it is a bad image for the ICA as well, isn't it? So, in order to avoid all sorts of conflict, the ICA suggests always documenting the discussions, documenting all of the observations, documenting whatever is there between the principal auditor and the other auditor. So that when you make those working papers, everything from your end, you will be in a much safer position with respect to the final reports. In case there is any conflict at any point of time in future, then you can simply show the documentation and say, this is what was agreed and signed by both the parties. So this is something you cannot blame me. You need to take the responsibility. அப்படின்னு clear-ஆ சொல்றதுக்கு வாய்ப்பு இருக்கும். And more importantly, this is more important for a small scale auditor, because principal auditors who are very big sometimes can push the blame onto the small scale auditor and say he has done the work incorrectly. So when you get all the documentation and stuff in place, you can say that, boss, this was discussed and documented. Just because I'm a small time auditor does not mean my professional integrity is compromised. So you can show them all the documentary evidences and try to prove your innocence. So with respect to any chartered accountant or any professional in place, always those discussions, documentation are first thing, which is very important. You need to give adequate preference to their professional competency and treat them as equally respected individuals. Now let's move on to the documentation. What exactly will be the documentation carried out between a principal auditor and another auditor? Components whose financial statements are audited by the other auditor and their significance to the financial information of the entity as a whole. So what is the principal auditor required to do, Abdina, with respect to the Tata Sons as a whole? How significant is TCS? How significant is Tata Motors? How significant is Tata Steel? How significant is ITC? How significant is a specific brand? So all of this you need to take into consideration and report for their purposes. The principal auditor needs to document all of these and see which one will become material for them, which one will become immaterial for them, which one needs to be consolidated, which one needs to be considered as an associate, all of which one needs to be considered for segment reporting. All of that can be taken into consideration. And names of the other auditors, not just the names, their professional competencies also required to be documented in the audit report as well. When you are issuing the audit report and you are using the audit reports of other auditors, then you need to give adequate citation for the other auditor's work and say this particular entity was audited by so and so auditor with the professional qualification so and so. They have issued this audit report and we have used their audit report for the purposes of our consolidated audit report. Abdina, you need to give adequate citation. You need to give adequate respect for the other auditor in your audit report. Since you are using their work, you need to document their details also in the audit report. Third one, any conclusions reached that individual components are not material. See, like I said, if you take certain organizations of Tata, they individually, when you look at that organization, that individual organization will have its own materiality level, its own processes, procedures, everything. But sometimes when you look at the magnitude of Tata Sons is like humongous. TCS alone is valued at $17 billion. $17 billion. Let me try to convert that to INR. 17 into 70 is equal to 17 into 70. 1 billion is 3 zeros. Zeros, 3 zeros. This is the valuation you're looking at for TCS. This is practically the value of TCS in INR terms. Just look at that number. Is it? We are not able to count after crores also. That is the number, that is the size of TCS in the market. Okay. And when you are trying to audit something smaller than that, when you are trying to audit a entity or when you are trying to include an entity which is worth only 1 crore or which is worth 100 crores, here how many crores? Lakhs, crores. So this basically means 1,90,000. 1,19,000 crores is the market valuation of TCS. Okay. So when you are auditing a organization which is 100 crores or 1,000 crores, even 1,000 crores, just compare 100 crores and 1,000 crores with respect to this number. With respect to TCS itself, it is not significant. On top of that, you're adding Tata Motors, you're adding Tata Steel, you're adding Taj Hotels, you're adding this thing, what is that? The ITC brands. All of these things, if you're adding them together, do you think it is a small number? Tata Sons is humongous. Their balance sheets, the number of crores in their balance sheets will be very huge. And does this not mean that they will not have smaller organizations? No. Tata will have small scale subsidiaries, but the auditor, the principal auditor, needs to evaluate if they are material enough to report specifically in their audit report. For the purpose of consolidation, you will simply include it. Okay. But are they significant enough to give a specific mention in the audit report is what you need to think of. From the consolidation purpose, the numbers will be added because each and every single penny counts. So every single rupee will be added. But for the reporting, when you are giving, will you specifically give any audit report with respect to those particular numbers. Say there is a big observation. There is a big observation in the 100 crore entity. There was a significant fraud that has happened, and they have reported as the other auditor of that 100 crore entity has reported adverse opinion and has given a big qualification, everything he has put in the audit report. Now just imagine for the Tata Sons as a whole, for them 100 crores is nothing. Okay. For them, the daily number itself will be more than 100 crores. The daily signatures they do itself will be more than 100 crores. So when the entire organization's value is only 100 crores for the full year, do you think they will really bother about those 100 crores? They'll be like, 100 crores is gone. Okay, leave it. For me, I'm dealing in lakhs of crores now. So 100 crores is not a matter for me. Those lakhs are more important. So they will even ignore that. From other auditor's perspective, he has reported something which is very material. But from a principal auditor's perspective, this company is nothing in front of the materiality of the entire organization. So this is the reason you need to document why you have considered particular entity as material, why you have not considered particular entity as not material. So these documentations must be done. Next, procedures performed regarding components. So if the principal auditor is carrying out any specific audit procedures of the individual entities, then those needs to be documented. And naturally the conclusions that were reached and manner of dealing with the modified report of other auditor while finalizing the principal auditor's report. That's what I said. The 100 crores entity has given a modified report, but for the principal auditor, it is not material, it is not significant at all. So he will not report that in the principal audit report. But if something like TCS has a modified opinion, definitely the Tata Sons principal auditor will have to report it, because TCS is a huge chunk of their business. So you cannot ignore the material entities. Tata Motors has a Tata Motors may not be profitably good, but Tata Motors has a significant asset base. So as as a professional or as a principal auditor, even though their revenue is not significant, their assets are very significant. Just like steel, their margins are low these days, but their asset base is very huge. So you need to take them into consideration for reporting purposes. So all of these needs to be documented. This documentation is purely from the perspective of a principal auditor. You are the principal auditor and you are the one who is using the work of other auditors. And in this case, the other auditors, you need to sit with them, discuss with them, identify what are the conclusions, what are their materiality levels, what are the additional procedures performed by the principal auditor, the conclusions, and finally, whether you need to issue a modified report, because there are modification reports issued by individual other auditors. Next, how should the coordination be? Abdina, since the other person is also a professional, you need to ensure these things are taken care of. Sufficient liaison or coordination between the principal auditor and the other auditor. In the small scale organizations, this does not happen, but when you go to a large scale organization for audit, they will give someone called as a SPOC. special point of contact அப்படின்னு சொல்லிட்டு the entire audit team will be given a audit team from the management side, from the entity side, whose only work is to get the documentation from whatever is required by us. So if we send out a audit data request, if you are talking about company like TCS, to whom you will speak to? There will be so many divisions, so many people, so many operations happening, so many managers in there. Who will you speak to? That is the question, first of all. And how many times you will interact? Like there'll be so many people across an organization like TCS. So it is not practical for a auditor to sit and deal with each and every individual. So what TCS will do is they will allocate one team, 2 people, 3 people team, they will allocate for the audit purpose only. What they will do is they will be fully supporting the auditor in their audit works. So they will collect the audit request from the auditor, and then it is their headache to do the follow-up and get the documentation for the auditor, internal or statutory. Either ways it works in the same way. So you put your efforts and get the audit documentation, everything for the auditor, statutory auditor. Similarly, when auditors are involved, when multiple other auditors and one principal auditor is involved, then you need to establish a team which is going to coordinate and liaise with all the other auditors. SBI, principal auditor. The SBI has so many branches across the world. So you need to coordinate with all those, other auditors across all the branches of the world. And then you need to include their observations in your audit report. So there must be someone from the audit team who will be coordinating and liaising with those individual counterparts. Second thing, principal auditor may require other auditor to answer a detailed questionnaire. So this is with respect to the materiality levels used, the procedures used, the sample sizes taken into consideration, the usage of the software, all of that might be documented. Third thing, other auditor should coordinate with the principal auditor with respect to what? Adhering to timetable, meetings are scheduled, come on time. Second, bringing to the attention of principal auditor any significant finding, not just during the audit, even after the audit or after the audit report has been issued, the auditor has found something, then immediately it has to be brought to the alert of the principal auditor. Then compliance with relevant statutory requirements, even though if it is not material but the compliances are not being met, it needs to be reported. Next, respond to detailed questionnaire. So other auditor should also take equal part in coordinating with the principal auditor. And finally, the reporting. Express a qualified disclaimer of opinion because of scope limitation. That is, scope limitation abdina, you have reduced the areas which can be audited. What is that? Let us read further, then we can come back to this. If principal auditor concludes that he cannot use the work of other auditor, or principal auditor is unable to perform sufficient additional procedures regarding financial information of the component audited by the other auditor. The other auditor has issued an audit report, but whenever any information is asked from the management or the other auditor, no one is responding. Okay, they are not responding. Then what will happen? You have to give it in your audit report saying, boss, my scope is limited with respect to this particular organization because I'm not getting any responses from this particular organization, or some event has happened in the world which because of which instances you will put a point saying my organization we are not able to reach out, or we are not able to arrive at a consensus, or we are not able to perform medical procedures, we are not sure of the competence of the other auditor. All these things you can bring it in your audit report and give an qualified or disclaimer of opinion depending upon the situation. Second thing, report should clearly state the division of responsibility. Like I said, when there is another professional involved, it doesn't matter which profession, CPA, ACCA, CA, CIA, anything. You need to give adequate respect to the other auditor also, because they are also a professional. So since you are the one who is giving a consolidated audit report, you need to give adequate reference to the individual auditors in your statutory audit report. And that is the end of SA 600. That is the end of SA 600. So just give me 5 minutes time. In the meanwhile, you can try to go through the standard if you want. I'm sorry, I think my mic is muted. Let me repeat what I was saying. You guys can hear me now?
Yes, sir.
Hello, you guys can hear me now?
Yes, sir.
Guys, are you online? Anyone?
Yes, sir.
Okay. So I was talking about the. Yeah? I'll just get back there. Yeah, so let's get back to the standard SA610. Yeah, like I was trying to say, the SA600 is all about a statutory auditor. You are trying to use the work of another statutory auditor. But here you're trying to use the work of another internal auditor. There is a significant difference between internal audit and statutory audit. If you're trying to do both of them in the similar manner, there is something wrong either with your organization or with the auditor that is teaching you, because the very manner in which the internal audit and statutory audit approach the same problem is completely different. It could be the same problem, it could be the same trial balance, it could be the same set of accounts, but they will be approached in a completely different manner. Okay, so the internal audit has a different perspective on things. The statutory audit will have a different perspective on things. It could be the same thing that both of them audit, but the end result will be different in both the instances. So SA 600, we were talking about other auditor, other auditor, other auditor, but basically what they mean by the principal auditor and the other auditor is that both are statutory auditors, but the only difference is that they are not auditing the same entity. The joint auditors, what happens is both are statutory auditors and both are auditing the same entity. Then it is joint audit. Both are statutory auditors, but both are not auditing the same entity, but they are auditing in the same group. Then it is SA 600 using the work of other auditor. Other auditor by default means other statutory auditor. So now that we are done with the statutory audit part, we will come to the internal audit part. There are certain things with the which where the areas overlap with respect to the statutory audit. So like I said earlier also, internal audit will not restrict themselves to statutory audit areas. The scope of internal audit is much larger than the statutory audit. And that is the reason why statutory audit can use the report of internal audit, because their scope is much larger. So in case of areas of overlap, say there is a TDS verification that needs to be done. There is a tax related verification that needs to be done. Internal auditors might have done a much detailed analysis than the statutory audit. So they will simply say, why not I rely on the internal auditor's work? Because they have carried out the work, they have done the work just 1 month ago. For the same period, they have done it. In the results of that report are still valid. So why don't I utilize their work for the purposes of my statutory report? Okay, why don't I utilize their work for the purposes of my statutory report? Because first thing is it will make my life easy. Okay, it will make my life easy. Second thing is it will make the management's life easy, because all the responses they had to give, all the discussions they had to hold, all the documentations that they had to give, everything will be done away with, because you will be purely relying on the internal auditor's report. Now, if you as a statutory auditor again pick up the same documents, again discuss the same points, again try to document and get a result report from them for the same points, it will be definitely unnecessarily duplication of work and overlap of work, isn't it? So you as a statutory auditor, for the purposes of your statutory audit report, you need to decide whether it is required to be considering the work of an internal audit or not. Okay. So what exactly is an internal audit, Abdina? A function of an entity that performs assurance and consulting activities. Assurance is internal audits. Consulting is very specific requirements where the cost reduction is more priority. Increasing the operational efficiency is a priority. In those cases, it is called as a consultancy. Or you want to think of re-engineering the entire business process. You want to, I recently met one internal auditor here. He has this simple funda in his life. He will go to any, he will choose from the market, he will choose any particular company. Okay. So he will do some basic analysis about them. He will choose one internal audit, one company for internal audit. He will go and approach that company and will say, boss, this is my profile. This is what I can contribute to you guys. You hire me, give me a fixed salary of this much. On top of that, if I can increase your efficiency, give me so much of bonus and percentage. So this guy has approached one manufacturing entity like that over here. He has significantly shown them a 30% cost reduction in their manufacturing process. And he has taken the percentage of that and he has left the organization. That's all he does. So there are people out there who do consulting activities just for the purpose of redesigning, re-engineering the entire business process. There will be significant changes as to how things were happening before and after, but the outcome will be of higher quality or of lower cost or of higher output, whatever it is, whatever the end outcome that was required to be achieved will be better than before. Designed to evaluate and improve the effectiveness of the entity's three things: governance, risk, and internal processes. GRC அப்படின்னு சொல்லுவாங்க. Governance, risk, and control. Internal audit is all about these three things: governance, risk, and control. So this is what is the function of an internal audit. What are the scope of internal audit activities, Abdina? I told you it is all about GRC, and that is what they have given here: governance, risk management, and internal controls. That is what is GRC. And that is by default the scope of any internal audit in anywhere across the world. What is governance, Abhina? There is a very nice Latin phrase, okay? It says, who watches the watchman? Who watches the watchman? It's a very interesting philosophical question, isn't it? So that's basically telling us to watch our own actions. And that is what we do as a part of the governance. When the management is carrying out the activities of the organization, who manages the management? That is the biggest question, because if there is no one looking after the management, if there is no one looking at the works and performances of the management, they will simply take the organization for a ride, isn't it? So the internal auditors will play a significant role in evaluating the performances of the management with respect to the operations, with respect to managing the entity, with respect to the strategic goals, with respect to cost reductions, with respect to profit increasing, with respect to sales increasing, with respect to operational efficiencies, everything. This will not be covered by statutory audit at any point of time. The entire governance aspect will be restricted to one simple thing: compliances. Have the compliances been made or not? That is all statutory audit is worried about. But the internal audit goes beyond compliances and looks for the performance of the management itself. Next, activities related to risk management. Risk management under the every single line item you take on the balance sheet, on the profit and loss, on the cash flow statement, there is a risk associated with that. By default, by starting the business, there is a risk associated with that. So in case of any activity, you as an internal auditor will try to evaluate the operating effectiveness and efficiency of the internal controls independently, and then try to establish whether the risks, the internal controls in place, will suffice the risk requirements or not. Now, this is a very detailed exercise. For this, there are something called as process audits. For this, there are something called as risk audits. There are complete enterprise risk management audits. There are SOP audits. So many types of audits just with respect to, I'm talking only with respect to risk management and internal controls. All these audits that I've mentioned are very specific to risk management and internal control only. So much of detailed analysis can be done with respect to these two. But statutory audit is only concerned about whether the internal controls in the organization are operating effectively and efficiently or not. That's all. That is all the statutory audit is concerned about. They will give one statement, they will do one very sample basic checks, and they will try to leave it at that. Now, the scope of internal audit is much larger in this case, in this scenario. That is why the statutory audit will say they have done a much detailed analysis on this. They have done a much detailed audit on this. That is why I will take certain activities of them and I will give my report based on their observations. Because if the internal auditor says there are inefficiencies, naturally the statutory auditor can say with confidence that there are inefficiencies, because the internal audit role is much larger and deeper with respect to these aspects. So with respect to internal controls, they have given examples: evaluation of internal controls, examination of financial and operating information, review of operating activities, review of compliance laws and regulations. These are minor parts of the internal control review. So with this, we will stop here for the day. We will take it up in the next class, SA 610, using the work of internal auditors. Thank you, everyone. Have a good day.
Thank you, sir.
Thank you.